Hello, investors. It's Don Vandenbord, Chief Investment Officer and Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 9th, 5 o'clock p.m. Eastern Time, and you know if it's me and it's Friday, it's the big show. The expanded edition of the Revere Market Insight video where we take a detailed look at the prior week, take a look at what you need to know for next week, and update the world famous 21 over 21 leaders list, which really hasn't had a lot of changes lately. And that's what we expect to see when the market leaders are in a bullish uptrend. As you can see, state of the market, we continue an uptrend, but we're a little too extended on the Nasdaq 100. We flash this warning sign when we get 6% or more above the 50-day moving average. And we flash it on the short and medium term because we're in danger of a pullback. We've been here for a week, and maybe the Thursday scare is all we're going to get before we go sideways, but we'll take a look at that when we get to the chart. So as I mentioned, market leaders strong, clearly in an uptrend. Short term and medium term, we are in an uptrend. Short term, we use the 21-day exponential moving average and compare the 5 major indexes to that. Medium term, the 50-day moving average versus the indexes. We do have a yellow arrow, not as severe as it was when Hunter did the Thursday video because, excuse me, of the strong rally in mid caps and small caps today. Got us back in the vicinity of the 21 and 50-day moving averages, and long term, we're coming up on a year that we've been above the 200-day moving average. As far as what just happened today, this was very much the best case scenario for a weekly close. If you are bullish, S&P 500 up 1.1%, Nasdaq 100 up 0.6%, Dow up 1.3%, midcaps 2.2%, Russell 2.2%. So what happened this week? Let's get to the charts and we can discuss it. But first, let's take a look at the guys running Revere. That guy on the far left is our president and majority partner, Dan Stewart, as Tim calls him, America's fiduciary. And he really is. He sets the tone for everything that we do at Revere, our approach to the markets and to clients. And if you call 855 Real Wealth, that's 855-732-5932. It's his dulcet tones that you'll hear on the other end. And Dan is as a CFA, one of the most knowledgeable people of all things financial that I've ever met. This is me over here, minority partner, senior portfolio manager. Alex and Hunter are our analysts that are always feeding me ideas for our portfolios, and Tim, our chief strategist and specialist in inter-asset correlation and short-term signals. We're just passionate about the markets. Give us a shout if you're interested to learn more about our approach, where we trend follow, which means we participate full throttle in the markets when they're bullish, take a step back when we go sideways, and get the heck out of the way when the markets go down. Email any of us, Dan, Tim, Hunter, Alex, or Don at revereasset.com or call 855 Real Wealth. That's 855-732-5932. We've also got our office manager that's not on here, Miral Bakhta. We're redesigning the website, and her lovely face will be on here very shortly. So let's get to the charts. As I said, best case weekly close for the bulls. I'm going to bring up a 15-minute chart here. And 4-day week, 4th of July, we were closed. A little bit of a harsh sell-off at the beginning of Tuesday when we came in, but we recovered most of it by the end of the day. That's bullish. A little bit of a gap up on Wednesday. Sell off early, recovered it all by the end of the day to set new highs. Thursday was the key focus at the open as we gapped down between 1.4 and 2% on the indexes, ostensibly because, let me bring up TLT here, because interest rates fell too fast. So what you see here is as the price of TLT goes up, interest rates are going down. And this was the third straight gap. Wall Street has to explain a panic. The Wall Street media have to explain a panic, and I guess they said we're concerned that rates falling mean that the economy is not recovering the way it should. We've also got the Delta variant of COVID out there. But whatever, we set a low. You can see this 4290 area held, and by the late morning, midday, we were heading toward highs of the day, challenging the range that was set by the prior 3 bullish days. A little bit of a pullback into the close. Mixed open this morning. Nasdaq lagged, but when you gap up and your opening tick is the low of the day, this is just a trend update, all-time highs, broad leadership. Nasdaq lagged a little bit as you saw in TLT, interest rates spiked higher as the TLT pulled back, but broad rally. Laggard was utilities. That's okay because that means it's risk on if everything is up except for utilities and closing at all-time highs. Let's go back to the daily chart here, and you can see here's the quote-unquote scare at the beginning. Never pierced the 21-day exponential moving average. That's our short-term indicator on the S&P 500. Let me blow this up a little bit. Came within a couple of tenths of a percent of it, but even reclaimed the 8 by the end of the day, and then you see the power higher to close the week. That's just good stuff there. So now let's look at the Nasdaq 100, and we turned on the red light on Friday, 7/2, because you can see here in the box we were 6.4% extended from the 50-day moving average and 3.4% on the 21. That's extended also. Market didn't care. Tuesday by the close, 6.7%. We got over 7% on the 7th. That was Wednesday. Closed 6.8%. Gap down but recovered, closed at highs, still 6% above on Thursday, and we closed the week up 6.6%. What you're going to see here now, the angle of this red line here, the angle of the S&P 500 has not been severe at all. But if you count back 10 weeks, as this is 50 days or 10 weeks, you're going to start seeing this week, and this week fall off. And the prices, as long as it stays up here, you're going to see the angle of this start to turn higher. So we really don't have to have a harsh pullback on the Qs. We can just trend sideways. And by the end of next week, if we just go sideways, we'll probably be about 4% higher, and that's more within normal. Doesn't mean we won't have a harsh pullback. Doesn't mean that the market won't continue higher along with the 50-day trending higher, but this is very bullish. You've got Apple and Amazon, a lot of the top 10 acting very strong, propelling the markets higher, propelling the S&P higher, propelling the Nasdaq 100 very strong. You can see the relative strength here. 2 strong weeks, a sideways week, 2 more weeks, a very strong uptrend here now for the past 5 weeks in the Nasdaq 100 since this shakeout low here on 6/3 below the 50-day moving average. That was only a 1-day event, and it's just strong. We've got broad leadership. As I said, we closed with the best case scenario for the bulls. Let's go to the Dow Jones Industrial Average, which had lagged for a little bit, but had a good week. Really now just keeping pace with the S&P 500 over the last 3 weeks. A little bit of outperformance to close the week, but you can see here undercut and reclaim of both the 21 and the 50-day moving average on Thursday, closing just right at or near, right below all-time highs. We did close above 35, or we pierced 35K here. This might be an all-time closing high. I think it is for the Dow Jones Industrial Average. So that looks fantastic too. Let's go to the 2 weaker indexes, the mid and small cap. You can see weaker from a relative strength standpoint, which is this line here. A little bit of a harsh break, but all it did is get down to the bottom of this range, this 48-day, 6% deep base that we've been forming for mid caps, and bounce up higher right below the 50-day moving average, right above the 21, close enough to keep us, of course, on a full bullish posture here. And IWM, the small caps, same situation, undercut, not down to the bottom of the range, still lagging over the last 2 weeks. A little bit of uptick today on relative strength, back above the 50, just below the 21. And again, here's an 80-day long base. If we bust out above here, that's going to be strong for the economy. It's going to be good for the market overall. It'll expand breadth. Breadth tends to lag when mid caps, not tends to, it has to from a mathematical standpoint, lags when mid caps and small caps lag. But the strength lately has been in the big cap tech stocks. So let's get our charts back to a normal size here, and let's go through the 11 major spider indexes here and take a look at how they did for the week from a relative perspective. There was a big bounce back at the end of the week for especially on Friday, for stocks that have been lagging from the commodity type stocks. But all it is right now is a bounce until we get back above this downtrending 21-day moving average and then recover the 50-day moving average. You can see how bad relative strength has been. We got stopped out of all of our material stocks a couple weeks ago. Took one toe dip in here, got stopped out immediately on a couple of steel stocks. We don't own any of these, and there's none in the 21 over 21 list. So good day for basic materials, up 2%, but still a laggard index. Let's go to energy now. This has been very volatile lately. Big day today, up 2.1%, but you can see the volatility and the declining relative strength over the last 3 weeks in energy. The 21 is going to come through the 50 early next week. We don't own any energy again. We've been in and out of them lately, but not making any progress. FANG, we bought and sold, and that was the last one. And in fact, it got cut out of the 21-21 list this week. Let's go next to communication services, XLC, and a little bit of a lack of relative strength here, but price action is just fine above the 21. Financials, XLF, extreme lack of relative strength over the 5 weeks, bounce today with interest rates pulling back. And this pullback here corresponds to rates going higher, except for the last week or so when rates have taken a break. But these are laggards, and when interest rates drop, financial stocks are going to drop because it pinches their margins. Next up is industrials, XLI. A little bit of a laggard again over the last 4 to 5 weeks. There's one industrial in the 21 over 21, but it's DDD, and arguably that's a tech/industrial. But we did reclaim the 50-day moving average just barely, but the 21 is below the 50, so industrials are basing also. K, this is the XLK, the granddaddy. Extreme relative strength over the last 4 or 5 weeks, near all-time highs, and this makes up the majority of our holdings in-house. XLP is staples. When tech is strong and we're on risk on, staples tend to lag, and that's what you see here, right below the 50. The 21-day is below the 50 here, so this is consolidating and not a lot of strength to be seen in here, with the exception of Costco, which is the leading staple stock. XLRE real estate has been acting pretty well, just taken off this week after a nice 2-week consolidation. Positive relative strength on the week. Utilities, XLU, again, something that lags when tech is strong, and battling with the downtrending 21 and 50-day moving averages. XLV, healthcare. Let's try that again. XLV, healthcare. From a relative strength standpoint, just kind of neutral, trending a little bit higher, but weak on Friday, but price near all-time highs. A lot of medical stocks acting well. And finally, consumer discretionary, headlined by Amazon. You can see the big gap down here, with the gap down in a lot of the big, there's a lot of big tech stocks in consumer discretionary. that seems like a misnomer, but it depends whether you consider Amazon to be a tech stock. It's kind of a tech discretionary play, but bounced off the 21 just like we saw with technology and closing at all-time highs, XLY. So that's an outlook of the general sectors. We've got the weak sectors, basic materials, financials, staples, utilities have no representation, nor does energy. Energy's kind of battling, but no representation in the 21 over 21 list. And let's get to that list right now. Actually have 23 stocks on here because there's two that we added late in the week that don't want to not point out what we own. So anything that we have in here, this is our primary hunting ground for when we're looking to add things to the portfolio. Certainly things sneak in because and then they end up getting added to here because for the most part, we're not going to own something that's not strong over the 21-day moving average because we seek out the best stocks. If it's flagged here, we own it in-house. We've got 11 sectors represented and 17 industry groups. This is the key that you want to look at here, this 3-month relative strength. That's what we really focus on to get to our final list and our portfolio holdings. Let's talk about the two that got kicked out this week. I mentioned FANG got kicked out. This was pretty strong. Matador seems to have taken the mantle as the leading energy stock here, but closing just below a downtrending 21-day exponential moving average is FANG. And also Snap got booted out because its 3-month relative strength broke below 80. It actually closed above the 21, but this is a failed breakout as of right now above the 65 strong resistance area. It held above it for a week and a half, broke down below it Thursday and Friday. That's not what the leading stocks did. If you want to be included in that talk with the leading stocks, then you better act better. Reclaim the 21 by the end of the day, but as I said, below 3-month relative strength broke below 80, so taken off the list. So let's talk about the ones that got added. We added Marvell. This has been acting as strong, maybe just minorly, just a bit weaker than NVIDIA, which everybody's talking about with the split coming up. And the big run as it kicked off this latest leg of the bull up. But this has nice behavior also riding this ADMA up, a little bit of a pullback with semiconductors. Remember, semiconductors they're tech, but they're also cyclical as they represent strength in the economic outlook. And when that was a little bit questionable, semis pulled back over the week and a half, bounced off the 21 today, took a position in this to get rid of to take the place of half of our NVIDIA position, and I'll talk about that momentarily. Also, Amazon, this big breakout on, you don't often see 3 big bars like this that aren't tied to a news event or are tied to an earnings report. But the relative strength certainly kicked in, big volume. This is institutions buying, big breakout to all-time highs, just a very minor average volume pullback on Friday. This looks fantastic. So we bought it. We added it to the 21-21 list. Also added Apple this week, which we've owned for, it's going back to April of 2020. No serious breach of the 200-day moving average, but it's really underperformed the S&P 500 since last September. But we want to wait it till long term if we were going to sell it for tax purposes, and now it's riding the ADMA higher. We actually added to it over the last couple of weeks and put it on the 21-21 list. CMG, also something we bought this week and added to the list. As look at the relative strength on this, a couple day sideways action, pullback, just touched the 8 and then made all-time highs. The premier restaurant stock. Triple D, we got stopped out on this when it broke below the 21, but reclaimed it by the end of the week and needs to hold on to it. Now, this was a huge volume move up day. It was news related. It's been pulling back on lighter volume. This is a highly shorted stock, therefore more volatile. And it's hanging on by a thread to the 21-21 list. I debated dropping it since we don't own it anymore, but let's see how it recovers from this lower volume pullback. Lululemon recent acquisition broke out from a cup and handle base, looking fantastic. Roku also added back after selling it with this added it in this area when it was really strong, and then it had a failed breakout on some news, a 2-day pullback, so we got stopped on it. When it pulled back, this was a lower risk entry below where we exited. We exited about break even, and a 2-day bounce off of the 21 now. Roku looking pretty good, putting in this handle now. PayPal, recent addition to cup and handle breakout, just below all-time highs. AVTR medical stock consolidating above the 21, bounced off yesterday in mode. This one almost got booted. Look at the action here, but the strongest stocks will close the week strong, and that's what it did. Bounced off the 50 back above the 21 and near all-time highs to close the week. Revolve, 3 weekdays with above average, well, not above average, but higher than recent volume, but a big 8% move, although on lower volume, like how it undercut and reclaimed here. Needs to go sideways for a little bit to work off some of this volatility. ESTC consolidating nicely in the handle above the 21. Vive Systems coming up to the top of this now stage 1 base, stage 1 because it undercut the prior base. Riding the ADMA for, you're really seeing this in a lot of the leading stocks since this earnings gap up on 528, showing very nice strength. Signet Jewelers, undercut of the 21, reclaim of the 21, looking good. A little bit of a relative weakness this week. Net, one of our biggest 4 positions and one we've owned for a while, pulled back, held the 21, bounced nicely Thursday, and just consolidating here. I love this tight action over the last 3 weeks, setting up a launch pad for higher prices. CrowdStrike, same thing, all-time highs, just consolidating here with an upward bias just above this this base. Also looks like it wants higher. DocuSign, no quit in this one. Since its earnings report, just massive accumulation, riding the 8 higher, a little bit of sideways consolidation, which is expected. This little 4-day, another day, and a handle should show up here. But this looks really good, and just anytime sellers come in, buyers immediately gobble up those shares, and look how it did the week. This is the ADMA, no significant close below there. ANET, Arista Networks, consolidated near the 21, took off when it needed to and had a really good week. NVIDIA, first time, this actually closed right 0.1% above the 8. This closed below the ADMA. I mean, we're up 25 to 28% on the initial buy on this, and it made its run above the 20 to 25% area from the pivot. I took half of it off, and that rolled into Marvell when it had its first close below the ADMA. If we rebound here on strength, it did show a little bit of weakness with the semis this week, but if we rebound here with volume, I'll be glad to add it back. As I said, this completed its pivot plus 25% move, whereas Marvell's just getting started near the top of its base, and it also has the split pending. If you remember Tesla and Apple, when they had their 4 and 5 for 1 splits, that kind of put in a short-term top on them, and we like the velocity of money to keep running here. T-Mobile consolidating nicely right above the 21, bounced off of it here. AMT, real estate, wireless towers, nice week, bouncing off the 21 repeatedly. Domino's Pizza, no quit in this one, continues to ride the ADMA higher. And finally, Fortinet, which has been on this list for 6, 7, 8 weeks maybe. And if you own it, it's just been the easiest of holds. As look at how it just continues to grind higher from this 200 area up near 250, 20% gain there, looking good. And that is going to wrap it for the 21 over 21 list. Let's look quickly at the Dirty 30 and see who the leaders and the laggards on there are. A lot of these have turned into portfolio holdings. for Revere, the ones that have come back, and you can see a bunch of them now, 5, 10, 15, 20, 25 of them now within 15% of their highs. On the other hand, you've still got some that are, another 20, 25 that are still at least 50% off their highs. William O'Neill and IBD will give you the stat that the average leader corrects 72% once it tops, and some of them never come back. And this is a list of stocks that are nowhere near proper buy points and should absolutely be avoided. If you're interested in seeing this whole list, it's up to 79. Somebody reached out for me, and I gladly shared a CSV extract of this. And just email me, don@revereasset.com, if you want to take a look at the full list. That's going to wrap it. Well, it's not going to wrap it because I got to talk about what we did this week in portfolios, although I think I covered a lot of them. Adding PayPal, mentioned that. Adding Lulu, got stopped on Triple D. MSOS lagged. We got in that the prior week and out. That didn't last as it showed no strength whatsoever. We got in and out of Lennar this week as it's clearly the strongest of the building stocks. But the action the last, especially on Thursday, right shortly after we bought it, we buy things, we expect them to, we want to return pretty quickly. When we don't get it, we're impatient when there's other things that are working. So when this dip below the 21 and the 50 got stopped out for less than a 0.2% loss. I talked about we added a Roku back, CMG, added Amazon. Took a piece in NVIDIA off and added Marvell. Those are the portfolio changes for this week. You have any questions? As always, I'd love to hear from you. I'm on Twitter @DVandenbord. You can email don@revereasset.com or phone 855-REAL-WEALTH. Just very quickly, going into next week, we want to see Thursday's lows hold. That's going to pretty much coincide with the 21-day exponential moving average, and the Nasdaq 100 continues to be extended. But these 3 weeks back here, which was the end of the correction, are going to start coming off. The slope of the angle of the 50-day moving average will turn up, and that'll get it closer to price, and therefore less extended through time as opposed to through price correction. So that's going to wrap it. Ending the week, 7-9. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.